They will be able to what? Those people will be able to understand it well when they see me analyzing it every day live. With time, those who can watch the videos, with time watching me live every day, watching me live every day. So we do it on Tuesdays to what, Thursdays every morning. You do it during the learning session because the learning session is more profitable to me than the New York session. That's what, for me, that's what I mostly what find or see my profitability. The learning session is my best session. All right. Yeah, so if you want to be joining this thing too, you can take advantage of that and join us every morning. But you have to make sure you have joined the training before you can be able to join the morning sessions too as well. Yeah, so let's analyze this currency pair, Euro card. What did I see before taking this trade? So you can maybe take one or two things from this breakdown and you add it to what. So me, most often I'm a what, a day swing trader. Okay, I'm a higher time frame trader. So like the H4 time frame, that's what mostly I kind of play over there. I don't go lower to the lower time frame. If you see me moving to the lower time frame, what I'm doing over there is what, just to be looking for candle confirmations to what, follow the direction of what the higher time frame is doing. That's what I do. So I don't focus solely on 30 minutes and just be scalping over there. Okay, what I do is what, I'm kind of swing day trader. That's what I mostly do. So I take few trades within a week. The highest trade I will be taking within a week is like two. Within a week, that's my highest trade I mostly take on. And some of the days too, I don't participate like that. So yeah, so trading less is more. You get it, less is more. It's not about every day hammering, hammering, hammering. That's what is going to be making you a lot of money in the market. What makes you money is your loss size, not the number of trades you take. What makes you money is your loss size. So if you know you found something that works for you, what you have to be doing is what, you increase your loss size, you increase your bet size so that you can be what, getting the more out from the market. That's what you need to be doing. So I don't take a lot of trades within a week. The highest is like two trades within a week. That's what I do. So the whole of last week I took only one trade, but there was some opportunities that if it happens again, I'll be taking. I wasn't confident in those opportunities, especially on GBP USD. When it happens again, if I see something of that sort happening again, I will take advantage of, where is it? I think it's around this side. I would take advantage of it. So sometimes the market to give us some lessons to be learned from. Okay, so going back on during the weekend, I noticed that what, I should have taken that trade, and it would have given me like 1 to 4. One thing about my system is what, if you get a trade, you kind of get like good risk to reward. You get it, risk to reward in trading. Sometimes your win rate can be shitty. Your win rate can be like, you won't be getting a lot of, yeah, I think your win rate can be, the percentage will be low, but if you have a good risk to reward, all those losses can be recovered. So risk to reward, you need to make sure you are getting the best out of your winning trades. You get it. Don't be messing up the trade. That's why it's very important to understand where you are going to be taking profit. Take profit is very, very important. A lot of people, like, mostly when they get a winning trade, they are kind of, they will be shivering. They don't know their left and right. They don't know where to close the trade. So you need to understand where you are going to be closing trade. It is also very, very important. If you don't know where to close trade, that is when you start messing up your winning trade, because it's very hard to find a winning trade. If you get a winning trade and the market is moving in your favor, you don't have to be cutting your profit short. Wait for trade to be what, getting to your full potential. Don't just be cutting the trades, just like, don't be cutting your trade short. Okay, so make sure you are analyzing from the higher time frame, getting a good setup. Okay, know the setup that works for you. If it is about breakout that works for you, focus on breakout. If it's about retest that works for you, focus on retest. Make sure you are learning the ins and outs about the retest or the breakout. Then what, when it appears or when it is being presented to you, you will be taking advantage of them. You get it. So let me break down what I saw on this trade before. It's kind of a counter trend at the daily time frame, but there were a lot of confirmations that were aligned on this trade. That's why I took this trade. So first of all, when I'm doing my analysis, what I mostly do at the first point is I will check my fundamental. But one thing we saw last week was, there was not we were not having a lot of fundamentals last week. Okay, there were not a lot of fundamental. I think it was a clean day. And this week too, one thing I've noticed is what during the lending session, you are not going to be having a lot of like news, high impact news. So when I see mostly when I see something of that sort, I'm kind of like I see profitability ahead of the week. When you don't have like morning sessions, you have a lot of high impact. You don't have a lot of high impact news. Mostly the market gives opportunity, okay. And when we have a lot of high impact news, as in high impact news, one thing that mostly happens is what you might get a nice setup, and it is not advisable to be trading when a news event is about to be released. It is not advised, especially an out to a news event, high impact news event. It is not advisable. So one disadvantage about when a session is having a high impact news or a high volatile news, it's mostly mess up your setup. Sometimes you can get a good setup, the market will set up perfectly, but because there was a high impact news that's about to be released, you can't be taking such trade because of what the news event. You get it? Because of the news event. Because one thing about news events is what anything can happen. You get it? Anything can happen. Market will set up perfectly, but the news event will just move opposite to where you are expecting price to be moving to, or where you are speculating price to move into. So that's the disadvantage of what trading during the news event. So I always advise, all these things are something that I've experienced of witness, and most of my students that they are kind of like close to me have also witnessed that things too. So it is very, very important. Don't just be basing or just be focusing on because he said, oh, fundamental, like technical is saying, oh, everything is looking nice. The market is not moved by technical analysis. What the market is moved by is fundamental. That's what you need to understand. So if fundamental is moving opposite, fundamental can easily disrespect your technical analysis. Okay, but most often, it fundamentals aligns with technical analysis. But just wait for the news to be released before you take down. You take such trade. That's what I always advise. If you want to see consistency, I will always advise. Sometimes you might be lucky and the market will move according to where you are predicting or what your technical analysis is saying. But most often, when there was a news event, wait for the news to be released. That's why sometimes most of these proprietary firms they don't even allow you to be trading news event because they understand the negative impact of the news. Sometimes everything will set up, but the news will just there will be something like whipsaw. The market will come just take you out from the trade and it will later move in your favor. That's what you need to also understand about the thing. Okay. Sometimes everything will set perfectly. The news release and it will just take you out and the market will move in your favor. Okay, so let me break down because a lot of people are having some questions that they want to ask me. That's why I've kind of dedicated this period to what also reach out to people that they can't afford or maybe they can't afford the mentorship so that I'll be able to answer one or I will help them to what most of the questions that is bothering them. So please, one thing I would advise is what we haven't those systems that you have been hearing or been seeing people using it works. So be focused. You can't be doing in trading, you having thousands of ways you can analyze the market and be making money. As I'm selling, as someone is selling, someone is also see a buy. Okay, but at the end of the day, or at the end of what the movement of price, what is going to be unless the market moves before you see who is wrong or who is right. So just make sure you are focusing on one particular thing and you focus on. Okay, so me, as I've told you, I'm focusing on just when the market break out from a zone or a reactional level, I wait for the pullback and I'll enter. And without pullback too, some people will focus on the pullbacks on the lower time frame, other people too will focus on the pullbacks on the higher time frame. So you see, we're having different dynamics, different ways of trading the market, different ways to be trading the market. So be specific and just free your mind. Don't crowd your mind with a lot of technical information. It is not in trading. You see, in our traditional education or in the real world, what happens is what if you know more, I think you are going to be making money more. But in trading, when it comes to the technical aspect, if you know more, you become like you get confused more. So less is more when it comes to trading. Less is more. You need to focus on few things. Master, make sure you know the ins and outs about your system. Then you focus on that. It's not about knowing a lot of technical analysis that's going to be making money. Knowing this your A plus setup. When it happens, you hammer it. Know your A plus setup. Focus on. So that breakout that I'm talking about is it works. Okay, it works, but that's not my A plus setup. It's mostly what fails. Okay, but up to now, if you're applying it, sometimes it will go in your favor. But you see, in trading, we are trading to what? Make sure our win rate will move up. Okay, so if you have seen something that works more often, focus on that particular thing. Okay, focus on that particular thing, and what, make sure you are taking more of your trade on that particular setup so that you can increase your win rate. It's not about the number of trades, it's about what, the few trades that is going to what, give you high returns or give you high chances of winning the trade. That is the most important thing. Yeah. So let me analyze this hero card. I took only one trade last week and it gave me a good returns on that. And I was satisfied for the week. I don't have to be worrying myself going to be scalping gold as people have been doing. I want to be scalping gold. I want to be doing, and you are losing money. You get it? You are losing money doing those things. You are kind of stressed up. I just took only one trade for the week. That's all. Okay. That's all. So if you are trading proprietary firm accounts, getting high good trade, and the trade is giving you like 1 to 2. If you risk 2% on 1 to 2, it is going to give you 4% return. The following week, if you get 2%, you are going to get, adding it up, you have passed the phase one of your what, your account, that is 8%. The following, you start again the next week. If you get 2%, 4%, okay, and it's left with 1%. So you have to be strategic. You need to be very calculative when it comes to trading. It is not about like just be trading, and you don't have any plan guiding whatever you are doing. With that, it's going to be very, very difficult to be making money, or very, very difficult. Stop writing on the screen. It's going to be very, very difficult to what, seeing profitability in the market. So understand that, okay, and make sure you are planning towards that. Make sure, focus on your A plus setup. Focus on your A plus setup and risk more. What makes you money is what, your risk, your betting size. It is not the number of trades that is going to make you money. Your betting size is what makes you money. So if you know you are managing small accounts, what you can be doing is what, you can get a proprietary firm, you can manage a bigger account over there, increase your account size. If you know you are managing a small account size and you are profitable, increase your account size, go for bigger account and trade that bigger account. If you feel like you are not content with your $100, $200, so you want to be trading every day, that is not how the top people are making money. The top people are making few decisions within a week and they are making it big based on their what, their loss size, based on their best size. So that's the most important thing when it comes to trading. Yeah, so let me talk about this hero card. So first of all, what mostly I do is what, I do top down analysis, and as I've been saying, for now I focus on the higher time frame when it comes to my trading decisions. When I'm making decisions, I focus on higher time frames. I don't go and stick at the 15-minute time frame and just be scalping over there. It's kind of stressful. It drains, like it's kind of uh, it affects my psychology if I'm kind of on the screen scalping. You have a lot of things to do outside trading. You have a life to live. I don't have to be sitting on my screen, be glued to be watching the chart, be scalping. That is not what we are meant to be doing. Okay, so making few decisions, you make big money, you are out of the market. That's what you have to be thinking of. Okay. So I do, mostly what I do is what, I analyze from the higher time frame, then I come to the lower time frame. So this trade was, I think, was taken on Tuesday. Okay, it was early in the week. I took it on Tuesday. So I first of all analyze from the higher time frame. I draw my support and resistance levels. Okay, so these are my, I decide on my value support and resistance level. So this support and resistance level, some people call it what? In trading, okay, one thing you need to understand is what, this, most of the marketers have just changed some of the names of the how traditionally we used to be calling them, but they want to just be using some terms for it to confuse. This support and resistance and those things are the same thing as the other blocks and the fair value gaps and those things. They are all the same things. Okay, so that's what you need to understand. But they just use different names to just psychological levels, and those things are all support and resistance levels. So know how to identify the valid support and resistance levels, and I think you are there to go. So when it comes to this market, these are my valid support. And so how did I get this valid? Anytime you are doing your analysis, you need to look left. Okay, in trade, it's like you trying to, you see, when you are crossing a road. Okay, when you are crossing, maybe, yeah, when you are crossing the road, you need to look left and right. You look left and right. But in trading, when you are analyzing, because what you are trading in, what we mostly focus on, what historical data to make what present decision or future decision. Okay, you focus on historical data, you focus on the past price action to make future decision or future price movement, what price will be doing in the future. Okay, so we focus on the present, the past. So for you to know the past is what looking left. Okay, all these candles you are seeing are historical data. They are all historical information that has happened in the market. So for you to analyze, you need to look left. Okay, look left. So when I look left, okay, when I look left, my support and resistance, if you look left, this is the current market. So sometimes you don't have to just be drawing support and resistance and you just make you scatter your chart. Your chart should be looking good, be very clean. You don't have to just be crowding your chart with a lot of what technical tools. That is not the best way to go by. So just make it neat and simple. So the support and resistance, what you are going to be focusing on is what the current ones. Okay, the current one. So which ones are the current ones? If you look left, this is the current market price. So looking left, this is my current support. If price is heading up, this is where it is going to struggle to what to kind of break out. Okay, okay, to kind of break out. So these are kind of uh like bidding level, or kind of maybe where buyers and sellers are kind of fighting among themselves to know. It's a tug of war, like they are fighting to know which one is going to control the market. So if you look left, there was one level over here. So the reason why you mostly draw them is what, when price get to those levels, you are going to pause and make allow price to move to what, to confirm where it is going to head to. That's what you mostly what, that is why we mostly indicate them on the chart. We are going to pause anytime price will get to those levels. We are going to pause, just take a break, allow price to do whatever it will be doing. So if it is going to break out, we are going to be watching it. You confirm by candle closure. If it is going to retest to, we are going to confirm by what, the type of candle that is going to close. So if price close below this level, if it's closed below this level and it is bearish, it proves to us that the chances that price is going to sellers what, as in sellers overcoming this competition over here, is very high. So when it is about what retest, what is going to give us a confirmation, or what is going to kind of prove to us that price is going to retest, is what, the type of candle that's going to what, to be closing below this reactional or support level. And when price break out to, what you are going to know that price is going to continue to the next zone is what, when candle close above the zone, candle closure. Okay, so all these things I mostly talk about it during the training. So if you have not joined the training before July, we are going to be having the training too. So you can just make payments, you join, and you take it from there. Any questions when it comes to identifying the valid and the invalid levels, I mostly talk about. So when you join the training, so you can get access to be joining the what, the mentorship, to where you are going to be having live stream every morning. We take trades together, we analyze the market. So last week we did live streaming. We took our first trade on Euro card, which I'm analyzing it now, and yeah, you are down for the week. Yeah, so this movement, you can see that price has broken above this one. So it tells, it give us a clue, or what, a signal to us that what price is going to continue to the next one. So that is what you can use to confirm if candle is going to close above. So you don't have to just be what, when the candle broke above and it hasn't closed, you conclude that price is going to continue or buyers are now dominating. That is not how it works. For you to determine if the candle has broken above and it's going to continue to the next zone, what you are mostly going to use to conclude or to justify such is what, candle breaking above. So wait for candle to close. Candle closure is what we use to what, to make our decision. So price candle has closed. So we are going to be targeting these zones. Okay, we are going to be targeting this zone. This is our target zone. So let's move. So that's the only thing we are going to be doing at the monthly time frame. Monthly, we can't be making our decision on the monthly time frame. The reason is what, it takes time for the candles to form. So assuming making, waiting for price to just pull back closure, that means you are going to wait for sometimes the whole year and you are not going to be taking trades. You get it? So mostly it's very very important. That's what the reason we don't use monthly time frame, because it takes time for what, the candles to close. Okay, so what we mostly use you don't focus or directional bias on the monthly time frame. What you do is what the reactional levels. That is the most important because this is a higher time frame, and anytime you are going to see those reactional levels are where buyers and sellers meet. They are equilibrium levels. Okay, so those levels are where buyers and sellers meet. So it takes time. Sometimes it will take like 3 months, 4 months, especially taking monthly time frame for instance. For this one to for this one and this one for these levels to be created, it took number of months, okay, before we got this level. So we can't be using the directional bias on the monthly time frame to be making our decision. It's going to take our years for us to get a trade, okay. And those even some people focusing on H4, it looks to it's as in they see it to be what a very long time. So how come someone focusing on what the monthly time frame? With that one, the person might even stop trading, and it's even going to be looking boring as trading. So the monthly time frame, you mostly use it as what our directional bias. So let's move to the weekly time frame and see what's happening. So with the weekly time frame, what we did is what you have to look left. As I'm saying, when you're analyzing the market, look left. Okay, you need to look left and see what happened at the past. Okay, so you see when price was turning over here, this is not something like price turning over here is not something just uh, as in random. Okay, the effect was coming from the past or historic data. You see price has turned over here before, so the reason why this one there was a kind of equilibrium level over here is because of the past information or past data. You get, that's why you are seeing price turning over here. So let's kind of indicate it, or let's make it visible on the chart. So there was a level over here where it got retested. So you scroll to your left. So there was, so this is the hidden line over here is the current market price. The hidden line is a current market price. So we had another level over here. If price is heading up, okay, if the candle is going to move up, so candles are the same as price. That's what you need to understand. So if price is moving up, there was another reactional level over here. So if you want to get the accuracy of those levels, kindly make sure you change it to a line chart, okay, to get the body of the candle, the opening and the close of the candles. It's very, very important. When it comes to the support and resistances, some people will use the wicks, some people, but for me, okay, trading is a subjective game based on your experience level. So for me, my experience level, what I mostly use and it works perfectly, the kind of price is what we're expecting those levels is what the body of the candles, okay, the opening and the close of the candle. That's what it mostly helps me. I don't use the highs, I don't use the lows of the candles, I use the body of the candle. That's what mostly helps me to make decision in the market, as in price kind of respect those levels. Some people use the highs and lows. They are not wrong, no one is wrong, no one is as in correct or right, unless the market proves us or the market what give us an indication. Okay, so that's fine if it's working for the person, but if it comes to the trend line, that's when I use the highs and lows of what the I use the line highs and lows of price. But when it comes to the horizontal levels, I use the body of the candle. So this is where I'm going to indicate it. So kind of, okay, so where is the current market price? Okay, so this is where we are talking about. So let's move to the daily. Okay, so when it comes to this level two, I think we had there was a level over here. There was a level two over here. So moving to the daily time frame, yeah, so the daily time frame, as I was saying, the trade was a counter trend trade, okay, because we were going against the daily trend. The daily time frame trend is what? An uptrend. We had what? Higher highs and higher lows, higher highs, price pulled back. Okay, so the trend at the daily time frame is an uptrend. But if you move to the H4 time frame, it's what? A downtrend. So it was kind of a counter trend trade at the what? The daily time frame. So we have another support over here, a reactional level. So if price is getting to these levels, it's kind of what it's going to be expected. So moving to the H4 time frame. So please, those who are worried about what I'm doing, kindly, what trading takes time. All these things are based on my experience level. So give yourself time. Okay, give yourself time to master this skill. It's not going to come a day, it's not going to come a week. It comes with time. Okay, so give yourself time. Make sure you are decreasing or low, as in keeping your risks low, okay, so that you are not going to be psychologically affected by the losses you are going to be experiencing, so that you get time, you have a peace of mind, clear mind to what master this skill. Trading takes time. All these things are based on my 6 years experience. That's why I'm kind of just moving through very fast. It took me time. So it's not going to come a day. Sometimes those times the time frames used to be confusing me. Which one should I exactly be focusing on? How do I even do? But with time, as I give myself time, now things are kind of very simple and easy, and we keep on polishing our skill too as well. So it takes time. Yeah, so this is where the trade was taking. So the daily time frame, the H4 time frame, I noticed that the trend was what, a downtrend. Price just made pullback over here high. So if you kind of not seeing this one clear, if you change it to a line chart, you can see the pullback over here. Okay, so the skeletal frame of the chart candles, you can see there was a candle over here. So the moment this candle just broke the higher low over here, this higher low was broken, the trend shifted towards a downtrend. So currently the trend is what, a downtrend. Price just pulled back to the what, the monthly zone. So this is, you see the confluence over here. So you see the number of tools that are aligned at this point. So this trade, I should have even risked like maybe 5% on the account, because it's a high chance trade. The reason is what, you're having multiple confluences aligned at this particular level. The reason is, these are some of the confluence I'm talking about. This zone, you had it at what, mostly the violet zone. If you see violet lines on my, it means what, it's either the weekly or monthly zone. So this zone, we had it at the monthly level. You get it? And you see the candle has broken below. So this is one confirmation that shows that what, the candle is going to move down, even though the candle over here is what, a bullish candle. But if you see the wick, you notice that what, if you compare the upper wick to the lower wick, you will notice that what, buyers were kind of dominating. The upper wick is 14 pips. Looking at what, the lower wick is what, less than 14 pips. The lower wake is what, 10 pips. So the upper wake, the exhaustion is what, the exhaustion is more than what, the lower wake exhaustion. Exhaustion simply means loss of control. So upper wake simply means buyers have lost control in the market. You get it? Buyers have lost control in the market. So seeing this one, the asking, the length or the size of buyers losing control is more than what, sellers losing control. So it tells you, even though the color of the candle is what, bullish, but it tells you that what, sellers are, it signal to you that what, sellers are at this point what, dominating or controlling the market at this point in the market. Okay, so, and that is one reason. Okay, so we have what, buyers exhaustion over here. Okay, you have bias exhaustion. So it means, if you see bias exhaustion, what simply means is what, sellers are dominating the market. So that is one checklist. We've checked that. And again, you notice that this weekly or monthly level over here, the candle, what, the body of the candle has closed below. So this is also another clue. The body of the candle, you notice that the body of the candle has what, broken below. Okay, so if the body, and this is not any other time frame, this is not like 15-minute time frame that you can say things happen very fast, so this is kind of fake out. This is not like normal time frame. This is H4 time frame. It took 4 hours for this candle to just settle down, and as it settled down, you notice that the body of the candle has closed below. Okay, so it tells you that what, this is also another example that shows that what, buyers are losing control. So it is not about, so you see sometimes this, mostly you are being taught, you have to memorize the name of the candles, doji, hammer, and those things, and you don't understand the psychology behind that formation of the candle. Okay, so understand how to read candles. That's what I'm trying to explain it to you over here. So you notice that what, buyers have lost control. The candle has closed below the zone. Okay, if buyers were able to, if the candle was able to what, break above, you would have even concluded that what, buyers are kind of controlling, because a higher time frame zone and a candle breaking above, it tells you that buyers are kind of what dominating. But at this point, the body of the candle closed below, and mostly what we use to make decision is what the closure of the candle, the body of the candle. Wicks are just what insertion, what movement of price, and anything can happen. So this is what where kind of what when the market was moving. This is an insertion candle. Insertion candle, anything can happen. The only time you are going to make an informed decision is when the candle has closed. So at this point, when the candle closed below this level. Okay, so everything is saying that what sellers are at this point dominating, but that is not the only thing you are going to be considering or consider. Okay, you are going to consider again, we need to move to the lower time frame. So this is the point you are going to be looking for, moving to the lower time frame to look for confirmation. So with this example that I'm giving to you, the trend is what? A downtrend at this point. Okay, the trend is a downtrend when we as in marking or reading price using market structure. We notice that price was making lower high, higher low, lower low, lower high. We have lows and highs. So the moment this point was broken, the market turned to an uptrend, and this candle just broke this one, so it turned it towards a downtrend and just retested the zone over here. Okay, so now this is what swing low, swing high over here. Price has kind of testing over here. So when price go to the key level, candle confirmation, we saw what buyers exhaustion, sellers are now dominating. So let's try and pull up the trend line and see if you can get some multiple touches. So if you draw trend line over here, with trend line, you are going to be targeting the high of what? The level, the area, okay? The high of the what turning point. We are going to be using the wicks. Okay, so if you take this level as an example, the high of this area is what you are going to be using. The high of this level. So what's the highest level price go to at this level? That is what we mostly what when we are identifying our trend line, we mostly do. The highest level price go to at this area. The area I'm talking about is where this candle formed. Where was the highest level? So the highest level was at this point. Okay, that was 1.61099. That is the highest level. So you connect the highs to the what? The immediate or what? The preceding, is it the right English? The immediate what highs to as well, since the market is trending what? Since the market is trending down, we are going to use the highs. Okay, if price is in a downtrend, we don't draw. You can be using that wedge and those stuffs, but mostly when price is trending down, my trend line, who is drawing Kwajovi, I will just remove you. Why are you drawing on this thing? You are kind of distracting what I'm doing. So when price is trending down, okay, when it is making downtrend, your trend line should be above, unless maybe you just want to be using that wedge, like trying to, what do you call it, the channels. That's fine. But when price is trending line, your trend line should be above. Okay, when price is trending up, when the market is trending up, your trend line should be what? Below. It should be support, dynamic support level. So that's what you need to be doing. So at this point, price is trending down. So we connect the highs to this one. So this was the second touch. So if you stretch it, you notice that what trend this candles over here is kind of struggling to what break this level. So we had another confluence over here, which trend line is also aligned over here. So this is where, so after getting all these things, that is not the end, or that is not where we are just going to be taking an entry. Okay, sometimes price can just move up. So what is going to signal that what price is going to move down? That is where we are going to move to the lower time frame, because at this point there was an entry over here at first, but it failed. There was an entry over here at first when this candle tried to move, but I think the market, you can't just predict, you can't just tell where it should go. So it failed over here. There was an entry over here at the H4 time frame, but it failed. But this one, the second one, the entry was taken from what? The lower time frame. So if you move to the lower time frame, that's where you're going to look for candle confirmation. So when the candle, you notice that this candle closed below this one. Okay, it has broken this level, it has broken the weekly, and the body of the candle has closed below. over here. So this is where I took my entry. The moment I saw closure of the candle, a signal to me that what sellers are kind of now dominating at this point. Okay, because candle, bearish candle and H1 candle being able to close below this level, it gives me a clue. Mostly when I come to the lower time frame, I don't consider the levels. I don't consider the this thing the zones and those stuff, because everything is was what every decision was taken from the higher time frame. So I'm not bothered about these zones. What I'm most concerned about is what the candle formations and the candles that is forming at the lower time frame. I have to make sure candle is closing in my favor, candle is closing in the direction of the higher time frame zone. So this is where I took the trade. I will wait for what the candle to and the next candle to break the lows of this one. So if I've joined the training before, I talk about candlestick structure. Okay, so when price is trending up, you need to make sure for you to know that the candle is going to continue, the uptrend candle, the trend is going to continue. The next candle was should break the high of the previous candle to confirm that what the candle is ready to what move up. So if it is a down, it is the opposite is what the downtrend too as well. So at this point, you will notice that the candle over here has broken the low. If it breaks the low, it tells me that what sellers are going to continue pushing price down. So I placed my sell stop over here. My stop loss was below this one, targeting this zone. Okay, targeting this zone. This is my first target at the H4 time frame. This was my first target. So if you move to the H1, that is where the entry was taken. So let's replay it and see. So I'm now in the trade. Okay, so that is where the trade. You see, I mostly catch big pips. So this is where the target was kind of price got to the target, you get it. Right, if you move to the lower time frame, you notice that these wicks are candles. Yeah, so I took profits. I got like 2.4 1 is to 2.4 risk to reward. So I closed the trade like 1 is to, mostly I target 1 is to 2. So I closed the trade over here. So you see, there was no need for you to be just be scalping. If you get one good trade, it hits it with good risk to reward. You don't have to be stressing yourself, scalping, 10 pips, 20 pips, 10. Those people don't understand risk reward. You get it? And if I show you GBP USD, the risk reward was even insane. You get it? So higher time frame trading is the best. You are going to reduce your losses. You are not going to be stressed a lot as compared to every tick of the market you are in, every tick of candle, every tick of price you are in. Okay, I'm not saying this is the best, but this one is going to give you freedom, especially those who are having day job. If you focus on the higher time frame, H4 being the center of your what your direction, I think you are going to be what doing your job or be working at your work, and you can still be making money from the market too as well. So that's how it mostly works. But with this kind of focusing on the high time frame, the frequency of trades are not going to be more as compared to doing the lower time frame. Every day every second you get a trade. You get it. So this was the only trade I took last week. Okay, this was the only trade I took last week, and the same trade happened. I think the following day too, there was the same trade that happened on GBP USD2 over here. It was a good trade. If you move to the H4 time frame, you notice that there were multiple touches of the trend line. There were multiple touches. Was it this one? Okay. I think, yeah, that was the following day. So the trade happened over here. The train over. I think that those who are playing the music have closed. Yeah, so this was the trade I'm talking about. You see, there was a trade to over here, and the reward was kind of crazy. Price moved heavily, poured heavily to the downside. Okay, yeah. So all these things I mostly talk about it. I explain it well, especially those who are confused on how to draw the value support and resistance. So if you have not joined the training before, investing in yourself is the best decision you will do for yourself. Okay, so don't just be saying, oh, I'm giving my money to this guy to chop it. It took me 6 years to develop this skill, so if you are giving it to me, I deserve it. Okay, Yeah, so is anyone having a question? Anyone having a question? I've
I,
even elapsed the time. Yeah,
I have a
so
question.
yeah, what's your question? Ready?
You know, sometimes you do the analysis on trading view, then you see that there's a good entry for you. Then you get to MT4, MT5, then you see that the currency pair, the spread is too much. That if you enter the trade, you will not be comfortable.
Yeah, so
So how do you do it?
you need to check that this maybe the condition of the market. Okay. Maybe the condition of the market at that point in time. Either maybe slow, as in maybe bank holiday too can cause spread to move up, or maybe the instrument you are trading to can cause spreads to move up too as well. The time of the day too is very, very important. And when the market is more volatile to spread also increases. So if you check, so you need to anytime you input a trade, you need to consider or factor your spread into the trade you are into the position you are taking. So measure the zone, your target. You get it. So if you measure your zone, you need to measure the zone. Maybe you are targeting from here to here. Is what 13 pips. If it is 13 pips, make sure you check the spread. How much are they offering or giving it to you with the trade that you are taking? Maybe if it is about 13, if it is about they are charging you 3 pips, 4 pips, you deduct the 3 pips or 4 pips from the zone. Okay, you deduct it from the zone, then you'll be able to take the decision. If it is not something that you are going to you are going to gain from the trade, then you don't have to be taking it because it is going to go against you. So that is why you need to make sure scalping mostly you can't be using standard accounts for scalping is not favorable. So you need to maybe go for commission accounts. With the commission accounts, you need to make sure your account size is like $500, sorry, $500 or maybe more before you can be able to open such account. So you need to know the account type. Standard accounts, every broker the spread is high with standard account. So standard account is not used for scalping.
Thank you, sir.
You're welcome.
Okay, I have a question.
Okay, laughter.
I really appreciate your efforts.
You're welcome.
And I watched your last video on YouTube. You were talking about the breakout and the test.
Are you a Nigerian?
Yes, yes, I'm in Nigeria.
Okay.
Yes, I want to confirm how many touch sheets does it take before breaking out? Breaking out of the things. Assuming if I want to draw the trend line, how many
So
touch sheets
you see, when it
does
comes
it
to
take?
trading, no one knows the
Yeah.
outcome unless it has been displayed or unless price has displayed. Okay, so I can't tell you. Sometimes with two touches it can break. So you wait for confirmation. So the for you to know that it has broken, that is when you wait for candle closure. Okay,
Okay.
so this level as an example, let's say maybe we have a zone over here. You have a zone over here. I can't just say because price has just touched one, two. So that means the third one is going to break. Sometimes it can just be testing it like numerous times and it will just struggle to break. The only time you are going to know it has broken, for you to know it has broken, you have to wait for candle to closure. So this one like this, see as a candle broke, this is what a closure. Okay, this is a break, a perfect break.
Okay.
Now the candle has broken. I cannot make a decision. You get me? I can make decision. But if the candle like something like this, wicks, we don't consider or factor wicks as a break or yeah, we don't consider wicks as a break. The body of the candle closing above is what we mostly use to make our decision. So that is what you need to understand.
Okay. So.
Yeah. So I can't.
According to this one now, this one is a strong breakout.
Yeah.
Does that mean that the next one, the move will be bullish, like it will be going up?
So for with that one to so that's why I talk about what I said about the video was setup. So setup is different
Yeah.
from entries. Setups gives you like make you just prepare that okay, now it is time for you to kind of be looking for an entry. So setup is
Okay.
different from entry. As price has broken out from this side, it is now confirmed to me that I have to be looking for an entry. So entry, looking for an entry is also a different thing altogether. So looking for an entry, you check the timing. You get it? You check the timing, the session you are in, whether news there was a news to be hit or there was no news to be released. You check maybe the candle confirmation. You check the structure. So there are a lot of things that so candle a candle breaking out is not the only way to what confirm. So me, hello, can you hear me? Hello.